the idea of saying the best place in the world I can put my money is something where all the selling incentives are there, commissions are higher, the animal spirits are rising. I mean, that's going to be better than 1,000 other things I can buy where there is no similar selling enthusiasm and the desire to get the deal done and extra commissions. That's the single best thing to buy on a given day. I mean, it's
and I can't think of a time we've ever done it.
Yeah.
Ever bought an IPO?
Yeah, never bought one.
Yeah.
The largest IPO of all time, SpaceX, just went public this past week, and it is dominating the market coverage. It's already up 25.38% from its IPO valuation of $1.77 trillion. It's now the sixth most valuable company in the world by market cap at $2.64 trillion, and intraday it passed Amazon, becoming the fifth largest company, and it nearly eclipsed Microsoft at just under a $3 trillion market cap. With this IPO craziness, I thought today would be a great time to take a step back and learn from the greatest investor of all time, Warren Buffett. So I gathered everything he's ever said about IPOs and how investors should think about them. I'll then share my perspective on how these lessons apply to SpaceX today. With that said, let's roll the intro and get into today's video.
The following reflects the opinions of a man who spends far too much time thinking about stocks. Please do your own research before making any investment decisions. Nothing in this video is personal financial advice. Continue at your own risk.
My name is Zach. This is Dividend Data, and you should leave a like and subscribe to the channel if you want more investing videos just like this. Now, let's get straight into Buffett's perspective on IPOs.
The best single thing to use your money for in a given day is something that they got everybody in the world out pushing it. You know, it just doesn't make any sense. I mean, I'm not saying that necessarily what we're buying is going to work out better, but there have to always be better things than one single issue. If you make one decision on investing, if you can't find something among all the choices we see.
This is just common sense investing. I watch all of the investing shows. I am so plugged into all this stuff. And Buffett's right. When there's a big IPO, especially like SpaceX, everyone and their mother is out pushing it. And since this is the largest IPO of all time, it's that on steroids. I mean, you even have people that I like and think do great work. People like Gavin Baker, people like Brad Gerstner. They're going on CNBC all the time. They're going on every investing program, plus putting out their own content. People like Ron Barron, who's a major SpaceX shareholder. You have the crew from the All In podcast and all of their interviews at like the recent Liquidity Summit, which there were a lot of interesting interviews. As Buffett says, they've got everyone in the world pushing SpaceX right now. How could it possibly be the best investment opportunity at this moment? I can think of hundreds of stocks more attractive. Even on this list of the largest companies, most of them are far more attractive. Whether it's NVIDIA, Alphabet, Microsoft, Amazon, Meta, especially at a 1.5 trillion valuation compared to SpaceX at 2.6. And these are just the other large businesses. And that's not a statement about SpaceX as a business or its future prospects. It's a statement about common sense investing. Everything is driven by incentives. Most of those analysts, they've owned SpaceX stock for years. They are currently locked up, but over the next few months, that will become unlocked and they'll be able to sell their stock. So they want SpaceX stock to be priced high. Now, to be fair, a lot of them are long-term holders. They believe in the long-term mission, and they likely will continue holding for years and decades to come, but definitely not all of them. As Charlie Munger says, you show me the incentive and I'll show you the outcome. And the incentives are not in your favor as a retail investor here with SpaceX. Now, personally, I have a lot of confidence in the long-term success in SpaceX as a business. I'm talking 5, 10, 20 years from now. I think they will be an extremely dominant company. But that doesn't mean you should buy the stock today at a $2.6 trillion valuation when its revenue is less than 10 times the peers at a comparable valuation. And SpaceX is not even profitable and will not be anytime soon. They are in the massive hypergrowth phase, and they are coming from a much smaller base of revenue. That said, they're in a great position, as I will discuss later. I want to be clear, not buying SpaceX at the IPO does not mean that it will never be a great investment. Every great company has to IPO eventually. At one point, Alphabet or Google was a new IPO. Same with Microsoft, same with Apple, same with Nvidia, same with Amazon, same with Meta. These were all IPOs at one point, but they did not come out at this kind of valuation. And sure, over the short term, there will be many traders who make some money on SpaceX, especially in the first few weeks as the stock goes crazy, as only 5% of the shares are even available. I said this in my video on Friday that I think it could hit a $3 trillion valuation in the first few weeks, and it looks like we're on a path to that. But even great businesses can be a dumb investment depending on the price.
You have said that you've missed out on some of those, like you should have bought Amazon a long time ago, you should have bought Google/Alphabet a long time ago. Could this be one of those scenarios?
Oh, it always can be.
Yeah.
I mean, they were a paradise of the desert inn one time, many years ago. No, they had them in a little case. They came up 32 times in a row. Well, that's what, 1,000 times, a million times, a billion times. 4 billion to 1, a little over. So you can go around making dumb bets and win. It's not something you want to take as a lifetime policy, though. I mean, I don't worry about. I worry much more about the things I do than the things I don't do. I mean, I missed all kinds of opportunities in my life, but you just want to make sure that you're on the side of the house when you bet rather than bet against the house. You don't have to really worry about what's going on in IPOs or people making money. People win lotteries every day, but there's no reason to have that affect you at all. You shouldn't be jealous about it. I mean, if they want to do mathematically unsound things and one of them occasionally gets lucky and they put the one person on television and the million that contributed to the winnings with the big slice taken out for the state, don't get on there. It's nothing to worry about.
You want to be on the side of the house. Price and valuation matters when investing. You should try to invest with a margin of safety, not a price or valuation where you need the extraordinary to happen. Albeit, even companies priced at a premium valuation can grow into that valuation with time. But right now, if you're planning to hold the SpaceX IPO over the next few years, everything is working against you. All the incentives are working against you. The valuation is priced to sell. They were so happy about the IPO valuation. As retail, you have serious risk about being exit liquidity for some of these early investors and the institutional buyers that funded this IPO. Warren Buffett does a great job outlining all of the incentives working against you in IPOs.
The idea that somebody is bringing something to market today, a seller who has a choice of when to come to market, and that security, where there's going to be a lot of hoopla connected with it, is going to be the single cheapest thing to buy out of thousands and thousands and thousands of businesses in the world, is nonsense. So
and when it carries a 7% commission, or higher, it's ridiculous.
Yeah, it's ridiculous. So you know it can't be the most attractive thing. Now, but people get excited about what's coming and all that sort of thing. But I will guarantee you that if you have thousands of opportunities among stocks all over the world, and most of them are not being promoted or being sold with special commissions in them or something else, and then some other security is coming to market that day, when the seller picks the time to bring it, as opposed to just this auction market operating otherwise, it just doesn't make any sense to spend 5 seconds thinking about new issues. So we don't think about them.
An auction market prevailing in the stock market will offer up extraordinary bargains sometimes, because somebody will sell 0.5% or 1% of a company at a price that may be a quarter of what it's worth, whereas in negotiated deals you don't get that. An IPO situation more closely approximates a negotiated deal. I mean, the seller decides when to come to market in most cases, and they don't pick a time necessarily that's good for you. So I think it's way less likely that in scanning a list of 100 securities that are trading in the auction market, Well, in the 100 IPOs, if you scan 100 IPOs, you're going to come up with something cheaper than scanning 100 companies that are already trading in the auction market. It is more of a negotiated sale, and negotiated transactions are very hard to get bargains. If you take the houses in Omaha, somebody that lives next door to somebody who sold their house for $80,000 and their house is more or less comparable, they're not going to sell it for 50. It just doesn't happen. It's too important an asset, and they're cognizant of what it brings, what is being brought for similar properties. That's what happens in negotiated sales. Now, if on the other hand, there was some whole bunch of entities that own 1% of each house in Omaha, and you had an auction market in those 1 percentage points, they might sell at damn near anything, and occasionally they sell at crazy prices. So in my view, you're way more likely to get incredible bargains in an auction market. It's just the nature of things. And the IPO is closer. Sometimes there will be IPOs in terrible markets, and they may come very cheap. But by and large, that is not when IPOs come. They come when the seller thinks that the market is ready for them, and they come with an informed seller thinking it's a pretty good time to go public.
SpaceX and Elon just had the largest IPO ever. They negotiated the deal, and they are bringing to market with massive demand. They negotiated the price. They were thrilled to raise what has now become $85.7 billion to their balance sheet. They were thrilled about that at a $1.77 trillion valuation. Thrilled. And they should be. They can now fund a lot of their growth initiatives, whether it's the AI satellites, building AI data centers on land, or just buying up all the chips, or starting their new chip fab they want to work on. SpaceX is in a great position at this IPO. Honestly, it's working out great for them. And now that the stock's popped to a $2.64 trillion valuation, guess what they just announced? They exercised their option to acquire Cursor AI in an all-stock transaction. You heard me, all-stock transaction. And this is a $60 billion deal that they are paying for with all stock. They know the stock is priced at a premium if we're being generous. But in reality, it's just severely overvalued. And they're using that as an opportunity to use their stock as a currency to make an extremely large acquisition of an AI company. And honestly, it's a genius move. This is good for the business of SpaceX and its long-term fundamentals and business prospects. But for retail investors buying right now, this is just another sign that it's not the time to be buying. You have to be patient with these IPOs. SpaceX is picking the time to sell to us. They have the upper hand. Why on earth would it be a good deal for us right now, in comparison to all of the other hundreds and thousands of other public equities you could be buying?
We haven't bought IPOs, and if you think about it, you've got a whole bunch of people on the other side who have an interest in marking up each stage of it, even if it's phony. Sometimes they offer one price for the employees that already have the shares, but then they have an artificial price so they can say that this round went at a higher price. They're picking the time to sell to you. I like it when I'm picking the time to buy in a 2008, rather than having them pick the time when they've decided this is the time we can cash in by selling to you. We're going to do you a big favor and let you buy in. So I have never been a big fan of IPOs, and the valuations are kind of staggering now on some. If a company's going to come public, we'll pick a figure, $50 billion.
Okay.
What should you expect it to earn in 5 years? You should certainly expect it to be earning $5 billion pre-tax. I mean, if you wait 5 years to get 10% on your money, and people, they don't sell them that way. There aren't that many companies that earn $5 billion or more pre-tax. There's a fair number, but it's not that easy, and it's particularly not that easy if you count what you're paying the employees and stock options and all that sort of thing.
Ultimately, we're investing in businesses, and these companies have to make profits over the long term. And with an IPO like SpaceX at a $2.6 trillion valuation, using Buffett's logic, which was a 10x multiple of earnings 5 years from now, which let's just say because Buffett, that's probably on the conservative end, and no Elon company will probably ever trade at that multiple. But for something like SpaceX, they had $18.6 billion of revenue in fiscal 2025, Now, they've more than doubled that so far in fiscal 2026 due to the Google compute deal and the Anthropic compute deal. But those also at the same time could be pulled out by either party. But it did make the price to sales look a little bit better. But if we're talking a $2.6 trillion market cap, that means 5 years from now, using Buffett's logic, you would want to see SpaceX making $260 billion a year in earnings. They're not even remotely close to that in revenue. And frankly, I'll be surprised if they're making $260 billion of revenue 5 years from now. I would be impressed. I actually think that's probably possible more on the revenue side, but not really on the earnings side, that in that short of a time frame. And as I was listening to this Warren Buffett video, a lot of these interviews happened at the same time as Uber and Lyft going public. So I thought it'd be a good time to actually go and look at those as case studies. And what was interesting is these companies were going public and they were losing money. They were unprofitable. Uber went public at an $89 billion valuation. And if we go and look at their free cash flow, so in the trailing 12 months in 2021 Q2, they were earning negative $2.5 billion a year. Uber is an example where they actually hit Buffett's metric of 5 years later, $9.8 billion in trailing 12 months free cash flow. So that's why Uber has actually had positive stock performance since the IPO, although it's still only up 49%, 8.42% compound annual growth rate. So it's trailing the market from its IPO price, even though Uber was a success. By contrast, Lyft also went public around the same time, went public at an $18.5 trillion valuation. The stock is down 75% since that price, currently valued at $5 billion. And why is that? They were losing $500 million over the trailing 12 months when they went public. And over 5 years, they've only grown that to $1.1 billion of annual free cash flow. And this is just one example and in comparison that financials matter over the long term if you're investing in public stocks. It always matters. So today I just wanted to focus on some Warren Buffett lessons and important things to think about when you're investing in IPOs. But if you want to go watch my video I just made last Friday, I dive into the SpaceX S1. I dive into the entire business, their AI growth strategy, and how over the long term, it could be kind of attractive as well. And I add even more context about why personally I'm not buying at the IPO, but I would be interested after the stock sells off around 50% or so from here. If you enjoyed the video, make sure to leave a like, comment, and subscribe to the channel. And if you want to use the stock research tool I'm showing throughout, this is my next generation version of dividenddata.com. It's going to be releasing in the next few weeks. And you should add your name to the wait list, link in the description and pin comment so you can be notified when it comes out. And I'll see you in the next video.